Good evening, everybody. Welcome, welcome, welcome. Uh, Thank you for the first session of what I'm calling the tax life. And the tax life is for me, obviously, for me, um, it's what I do, is what I've been doing for the past 30 years. And a lot of different parts of uh, life happen. And I look to segment this part of my life, my profession, my career. Right now, we're going to call it my calling, um, and call it the tax life. And we all segment our lives. Sometimes we're parents, sometimes we're husbands and wives, sometimes we're um, employees or employers, but we kind of segment our lives and the things that we do. So, in this particular case, I want to talk about tax life, what it is to me, and then what I would like it to become to the folks that watch this these live sessions, and also the YouTube page that I'm going to have put together here in the near future. So, welcome to the tax life. I've got a lot of information I want to disseminate tonight, so I will be referring to my notes. But I hope I'm informative, educational, but also somewhat entertaining. All right, I'm gonna be your guide to figuring out and making taxes in your tax life a little less stressful, a little bit more control for you, and trying to build a better financial future. I'm excited you're here. If you're here because you want to learn how to save more money from your taxes, or gain clarity about how taxes work, or even stop feeling a little bit anxious during tax season, or even when you get your paycheck or your W-2, then you've come to the right place. Tonight we're going to start with a foundation, and the subject we're going to be talking about is why taxes matter, and what effect they have on you and I in our financial future. It's a big question of why taxes matter, but it's a really simple answer. Taxes are a big part of all of our lives. I may mention to one of my clients the other day that when I thought about it early on in my tax career, taxes affect people from birth all the way to death, and so it's important that we get an idea of how they work, how they came about, maybe even know the history of taxes, so we can understand what the concept is, and then also contrast what the current reality of it is. So by the end of this session, I hope that I will be able to give you a better understanding of taxes, and that it's not just what you pay or what you owe at the end of the tax season, but it's really going to be about knowing more about it, and then taking what you know and what you've learned and use it to your advantage through being strategic and tactical. Um, I want to ask a question first. What's the first thing that comes to your mind when you think of taxes? Do you think uh, I'm contributing to society? Do you think what a pain in the behind? Do you get anxious? Do you get nervous? Have you ever suffered through an audit? Drop me a comment below. Ask me any questions you want. I'll take questions maybe throughout the lesson tonight, but also before we get back together for the next lesson. So, why do taxes matter? Why do they even exist? At the core of taxes and taxation is a principle, and tonight we'll be going over four principles. Okay, and they're pillars, if you will, or cornerstones of taxation. And the first pillar we want to talk about is called contribution and accountability. Okay. And the contribution part comes in that when we think about taxes, they are I guess our dues that we pay or our membership fee that we pay in the society that we live in. The taxes, they trickle down to a point where they provide for services like roads, and infrastructure like roads, and services like schools, hospitals, even safety nets like Social Security, Medicare, and even welfare. So conceptually, taxes are about shared responsibility. That's at its core and it's at its origin. And everyone in the society who's working and earning pays their share, or what the government determines their share is, to maintain and grow the system and maintain order in the society that we have. So, again, principle number one, contribution and accountability. So we talked about the contribution part. Let's talk about a little bit of history of taxation from its origins and conceptually, but also how taxes actually work today. The first thing we want to talk about is the history and talk about taxes from a historical perspective, looking at three different societies through history. The first society we want to look at is ancient Egypt. Now, in ancient Egypt, taxes were paid by um, the public crops and things like wheat and barley and things that they use for sustenance. Taxes, they funded irrigation, water systems. As you know, Egypt is primarily desert. There are a few waterways like the Nile, and different smaller seas, but irrigation was a really big part and needed to be funded to be able to provide for crops and food sustenance. So early on, the contribution that the Egyptians provided in the way of taxes helped to put the society together and to maintain the society. It even funded things like religious institutions, um, public buildings, and even things like the pyramids. Back then, it wasn't about percentages like it is nowadays or brackets. It was really at that time, it was about survival of the people in that society, because those that were of the ability to um, have crops and have farms and be in agriculture, were part of paying to increase the society's sustenance and living of a standard of living. So it was really, really important for that contribution from the taxpayers. But on the other side, the accountability side, is when taxes were submitted or collected, the government who collected those taxes needed to be accountable for the money that they were receiving from the ancient Egyptians. And also the ancient Egyptians would need to be accountable for paying their share to fund society. So when when we talk tonight, I really want the idea of um, maybe a change of perspective about how you think about taxes and the concept of taxes initially, and the perspective of how you feel about it now. Hopefully, after this lesson tonight, it'll kind of give you a different viewpoint, and the information that we share will give you more power when it comes to taxes. So the second society we want to talk about is the Roman Empire. And the Romans, like the Egyptians, received taxes, and taxes were collected from the citizens. And the Romans taxed all kind of goods and different kind of property. They even taxed the labor of people, kind of like what we have now, employment taxes. And they also taxed the ownership of people, which some of us know a lot about. But they used the taxes from the contribution of taxes. They took that money and was accountable for it to produce things like aqueducts and military defense, which is obviously important in the Roman times, and structures like the Colosseum. where the lions ate the Christians. So, but you can see how the principle of contribution and accountability is important at the start of taxation. And then we also want to talk about the accountability factor in Roman society. The tax collectors, they initially started off doing a good job, but as people do, they get a little greedy, and then tax collectors were often the um, the the people that actually took more than their share of taxes that they were to collect. They were corrupt, and then that being corrupt and not accounting for the money properly also brought frustration and consternation and a negative connotation to taxes closer to what it is now than what it was originally conceptualized as. So finally, we want to talk about our society, the United States. Now, granted, there are all types of different taxes, but tonight's conversation is primarily going to be on income taxes. But in future lessons, future sessions, we'll talk about all the other taxes that are accounted for and levied on a society and taxpayers. But tonight, primarily on income tax. And in the United States, it was 1913 that the income tax was initially implemented to provide for the nation. And in 1913, the tax was implemented, and it was supposed to ensure fairness and to those who earned and paid taxes. The more you earned, the more you paid. And those taxes back then were helping to grow the society because the United States was still in its infancy. The reality today, though, is in our society, the tax system is very, very complex. The tax code has, many, many volumes, and the IRS tax code is so complex, it's grown into something that, um, you know, the necessity for whole industries like tax preparation and tax planning because of the complexity of the code, these industries have um, arisen, and the need for professional help is even greater than it's ever been before. One thing that's a disconnect um, from the concept of contribution is the accountability, and what a lot of people in our society today, they don't feel connected to the original design of taxation, which is the the contribution for the greater good, because they don't and we don't see those benefits directly or personally as we're paying out money, um, and there's a disconnect between what is the initial and conceptual thought about taxes and the reality. But I can tell you that shifting your perspective and understanding the concept of taxes and even what it's still doing and what taxes are still doing today will allow you to maybe go from resentment to empowerment. That's hopefully what the design is. I mean, I can tell you personally that I'm not opposed to paying taxes. I wake up in the mornings and the street lights are working, and there are police services out there, and I come at home at night and the street lights are on, and there's sewer services and things like that. So um, I'm not opposed to taxes. What I am opposed to is a taxation system that is inefficient and waste my tax dollars or redistributes my tax dollars um, unfairly or unevenly or again inefficient in the leaders that we entrust our tax dollars to when they don't have the certain level of responsibility for those dollars and accountability to us who contribute those dollars. That's where I have a problem, and probably like many of you have a problem. I want to talk about some examples of how contribution and accountability, that first principle work. But I worked when I first started doing taxes, long time ago with H&R Block. Um, they would they would stick me with the clients that didn't have a lot of tax experience, didn't have a lot of forms, the tax returns weren't complex. So that first year, I got a student. Well, she was actually a graduate of college, and she had just began teaching, and she came to me, and it was a year after she had her first year teaching. She had her W-2, and she was frustrated at the taxes that were taken from her pay. And through the interview and talking to her, and trying to explain things to her, I actually found out that she didn't realize that some of the taxes, obviously not all, but taxes actually fund the schools, which funds her salary, which help to educate the children that she teaches, and hopefully makes our society a little better through education and knowledge. So when I broke down to her how her particular tax situation was working and the contributions that she made were made to society, and part of the investment and actually employed her, she felt a little more easier about paying taxes, a little less resentful, and we both had a laugh about that. But we both were on the same page about the fact that we would like our tax dollars spent efficiently, and the government had to account for that. One other incident that happened this past year, I had a small business client, and they were really concerned about self-employment taxes because um, as a business owner, when you make profit, part of the taxes that you have to pay not only is income taxes, but self-employment taxes. And they were really concerned about self-employment taxes. And as we took a closer look at the tax return and I interviewed them, we saw that the taxes, and I explained to them how the taxes that they were paying, again, helped to fund some of the services that they were using to run their business, in particular, sanitation services, because they are in a business that uses a lot of products that create a lot of different um, trash sources. So just kind of explaining to them, hey, look, it's not as bad as you think, as long as the government and those that are in power spend our money properly. So as as uh, as we look closer, I got a question for you. When somebody brings up the fact of taxes and paying taxes, um, and you think about your contribution, do you feel that the powers that be in the government are being fully accountable for the money that we spend? How do you feel about that? Let me know in the comments. Let us know in the comments. We're going to have this is going to be a place for hopefully true discussion, back and forth. All right. Um, so let's talk about principle number 2. This principle is called knowledge is empowerment. Okay. And let's talk about why knowledge matters when we talk about taxes. So the concept of knowledge and knowledge is empowerment is really a concept that means the more you know about a subject, the better decisions you can make when it comes or pertains to yourself and that subject. Um, there have been general studies and analysis. I took a look at a few weeks ago, actually, and it had measured taxpayer and the impact financially on taxpayers and taxes that we pay. And the research that I saw, the general report that I saw, said that taxes can consume, depending on how high your income goes, obviously, it can consume up to 40% of an American taxpayer's income throughout their lifetime. Now, that study also included income taxes, things like sales tax, Medicare, Social Security taxes, real estate taxes, personal property taxes. So taxes as a whole on the high end can consume up to 40% of a taxpayer's um, income over their lifetime. So you can see why knowledge in this area should matter. 40%, that's a lot over the course of a lifetime. Um, so having certain knowledge about taxes and taxation, and then using that knowledge to to your advantage will help you to bring that 40% down to 30% or 20%, depending on your knowledge level. So taxes are one of life's biggest expenses, obviously, and knowing how they work helps you to take advantage of the IRS code and different taxation systems and keep more of your income that will allow you to realize your personal goals and personal dreams. All right. Understanding taxes means some simple things like avoiding penalties, maximizing your deductions and credits, and it just means an overall, if you know about them and then execute sound um, strategies and tactics and in a proactive approach, it can help you make better financial decisions, which will hopefully help you to have a better financial life. So I I had a client a few years ago, and the this principle, knowledge is empowerment. Um, it really is um, um, a good example, real life example. But the client was in their um, I think mid 50s and early 50s maybe, and they were concerned about retirement. And we were talking during a tax interview, and she was saying that, wow, I think I'm behind on my taxes. I'm not sure if I'm going to be able to retire when I thought I wanted to retire, and how she was a little stressed out about that. And I said, did you know that there is a thing called a catch-up provision? And she was like, catch-up provision? I said, yeah. The government allows for certain individuals when they get to be a certain age that if they have not set aside a certain dollar amount of their income for retirement, that they can actually sometimes double or even triple the standard amount that they can set aside in tax-free vehicles to play catch up. And we actually did some projections that year, and we sat down and we said, okay, what years you want to retire, what age, how much you think you're going to need. We looked at all her expenses and what kind of lifestyle she wanted to have, and we were able to map out a strategy that will allow her to catch up, and by the age that she wanted to retire, not the later age she thought she was going to retire, but the earlier, more um, dream age that she had. By playing and using the tax code for the catch-up provision, we were able to put a plan together that allowed her to. She's actually on the way to retiring on her original goal. So the idea of her not knowing that versus when she found out, the knowledge that she found out from us empowered her to reach her real true goal and not settle for the alternative, which is um, having to retire a little later. So that's an example of how knowledge is empowerment. Um, that's principle number two. I got an action item for you. It's something I want you to do. I want you to review your latest tax return, and I want you to try to identify something called your taxable income. Okay, go on your 1040 form, and it should be on the first page. But this is an exercise for you. I want you to actually see what that number is. The reason why I'm asking this is I can tell you from my 30 years of experience, when it comes to taxation and taxes and the experience of tax season, so to speak. I have experienced this a lot in my time as a tax professional that um, taxpayers will, let's say, drop their documents off or submit their documents to the person that's doing their taxes, and then they say, call me when it's done, and they don't have any real either they don't have a desire or they don't have the time or they don't make the time, but they don't really have any knowledge of actually what's going on because they're paying somebody to prepare those forms for them. I have always been of the opinion that if I'm sitting down with a client or talking on the phone or doing a video um, appointment, I like to educate as the taxes are being prepared. I like my clients to know how it's prepared. I like them to know what's available to them and to ask questions and to be a full participant in the process. Um, I feel that when you know more, it empowers you. Just like this principle number two, when you know better, you can do better. And I love it when clients want to be interactive when it comes to preparing their returns. Um, so knowledge is empowerment. Um, the knowledge of taxes can turn something that would be frustration in an anxious situation. It can actually, once you start to know what some of your options are, and even if you have to talk to a professional about it, if you start to know more about the subject, then you can use certain tools and you'll have more control on the final outcome of the product or service. Okay? Question: what's one thing from a tax perspective you always wanted to know or understand? Um, Share it in the comments and maybe we can talk about it in future session, help break it down, or maybe it will end up being one of um, our Facebook Live session or one of our YouTube videos. Okay, the third principle, excuse me a second. Third principle, ownership and strategy. What does ownership have to do with taxes, or how does ownership fit in the taxes? When we talk about ownership, we're actually talking about this immutable law that states what you don't own will own you. I want you to think about that for a second. What you don't own will own you. Basically, what this principle says is that in a taxation realm, if you don't take understanding of your taxes, you're going to always be at the mercy of a person or a company that's preparing your taxes. You're going to be at the mercy of the IRS or the mercy of the state that levies taxes on you. You're going to always have um, a certain anxiety when it comes to taxes. That okay, that's if you actually care. But if you care, yeah, there'll be a certain uh, uneasiness and always a concern that hopefully I don't get that letter in the mail from the federal government IRS, or I don't get that letter in the mail from the state. But ownership means taking ownership of knowing about taxes, so they won't feel like a mystery, so they won't feel like a burden, so they won't drain up to 40% of your income over the lifetime. Taxes aren't something to fear. In my opinion, they're something to be knowledgeable about, to be obviously because of the tax life. For me, it's something to be inquisitive about. Always ask questions, always be on top of things. Take ownership of what I call your tax life, and that means that you'll have less anxiety. You'll be in more control when you take a proactive approach and take ownership. Did you know that the tax code in the United States is in some cases written to incentivize or change behavior, and it incentivizes things for the taxpayers for saving. You get rewards for saving, behaviors like um, investing in starting a business, or even obviously contributing to the welfare of the society, like things like um, charitable contributions to Goodwill or Salvation Army or to other charitable organizations. But you're rewarded for doing that through the tax code. Okay, you're rewarded by things like maximizing deductions and maximizing credits. Deductions reduce your taxable income down, okay? And you want your taxable income down. And deductions are things like your mortgage interest that you pay on your home or charitable contributions. And then credits reduce your tax bill. So once your tax bill is decided or calculated, now a credit comes along that you can get that will take that number and reduce it by the amount of that credit that you qualify for, like the child tax credit or the earned income credit. So you can see how knowledge about the taxation system and taxes in general will empower you to make really good decisions um, in your finances. Okay, let's talk about the real world and how an example of knowledge is empowerment. Conceptually, let's talk about the United States. Conceptually, we've all heard about tax brackets, right? Okay, tax brackets, tax brackets, tax brackets. What tax bracket do I fall in? Okay, well, tax brackets can actually get a little bit, um, I won't say complex, but you have to actually know about them. They're based on your filing status, they're based on your income, and then there are percentages of taxes, or there is a percentage of a tax that's based on your income. And most people think that the tax brackets that are set up, and you start here at a lower amount, and then the taxation goes up and up and up as your income goes up. Well, that's not quite fully true. I'll give you an example. Um, you can look at taxes in the United States and tax brackets like a step ladder, and every step you go up, your your tax percentage will go up on what you have to pay on your income. What most people think is that if you get to a certain level of income, then all of your income will be taxed at that level or that bracket. But the reality of the situation in the United States, our tax system is called a progressive tax system. So you only pay taxes at the bracket that your income is at, not at the total amount in all the brackets. So quick example, let's say you made $100,000 a year, and the first, I don't know, first 25,000 was taxed at 10%. These aren't actual tax brackets. This is just for example purposes. So that first 25,000 is taxed at 10%. And let's say the top tax bracket is, I don't know, 40%. So most people think, okay, if the top bracket is 40% and I make 100, which is in that top bracket, then my tax is going to be 40% of 100,000. But in reality of it is, you only pay at that income as your income increases or steps up. So your first 25,000 would be taxed at the 10% bracket only. And then the next 25,000 from 20 to 50 might be at the 20% bracket. You get where I'm going? And then the second that goes from 50 to 75 will be taxed at the 30% bracket. And then only that portion that is at 75 to 100,000 is taxed at that 40%. But most people think that whole 100%, that whole 100,000 is taxed at 40%. So again, once again, this is if you think every year, wow, I mean, I need to actually, I have clients every year when we sit down in an interview or when we talk over the phone or over video, they inevitably somebody during the tax season says, "Man, I'm getting a lot of overtime, or my income's going up. Man, I mean, I should stop working. Do you think I should stop working because I'm about to hit this certain bracket?" And my first thought is, okay, they're misunderstood and how the brackets work, no, don't stop working. No, don't. If you get overtime, get all the overtime you can get. We only have a certain amount of working years in our life anyway, and especially if you enjoy what you do. But yeah, make that money. Go ahead. Do not stop because you're not taxed on the full amount you make for the year in that bracket. If that's the higher bracket that you're afraid to go into, you're only taxed the difference between your income in that last bracket and then the income in the new bracket. So that's an example of how knowledge and the ability to take ownership of knowing how taxes work. Now you can not have to worry. You can now strategize for that difference in income when you move to the next bracket on that portion of income. But again, ownership and strategy, that's the principle. Take ownership of your particular tax life and then start to implement strategies and tactics to affect your tax life. And when I mean affect it, I mean work on it to bring your portion, your contribution down to what is fair and equitable by tax law. Okay. The strategies for ownership. Okay. When you are taking ownership and you want to start to employ strategies on a planning type basis, then you got to keep good records. You keep records of all your income and all your expenses. I mean, I would think I would like everybody to keep good records, but the more strategic you get, when you're not just handing your documents over to somebody and saying, I'll see you in a couple of weeks, and you're hoping and praying that you don't owe or that you owe less or that your refund is big or whatever, but you're taking ownership and you're being strategic, then keeping good records, that's really good. And now you can plan your financial moves around your tax life or create your tax life around what your dreams and goals are. And now you plan your tax life based on the applicable laws that you are in at the current time or that you position yourself in the future through planning, strategies, and execution. Okay, so the key takeaway here for this particular principle of ownership and strategy is that ownership is not about knowing every tax rule that's out there. What it's about is knowing that you have um, levels of control on how the final outcome appears to you or the final product comes to you, your tax life, and how you can take ownership and be strategic about it is how you benefit from this particular principle. Okay, the fourth and final principle, okay, the law of provision, number four. Four. All right, the law of provision, okay? And again, we're talking about concepts and then we're talking about reality. Um, in my lifetime, um, most things in concept start off good. Let's use that word good, okay? Most good things. But then man gets involved and we corrupt things. And the reality of the situation comes. And then that concept is different in its reality or in its execution. So we got to keep that in mind, okay? Again, this whole conversation tonight is about your perspective and in your thinking about taxes. Again, why it matters, okay? So this final principle, the law of provision, okay? Law of provision tells us that for anything to grow and thrive, it must be supported. Okay, so let's talk about the big picture. For anything to grow and to thrive, it must be supported. So for, let's say, our country to grow and to thrive, your contribution, your accountability for your portion, your tax contribution, so to speak, allows and allowed, in our forefathers' contributions, allowed our country to grow and to thrive. It was supported by our tax dollars, and it still is supported by our tax dollars. Okay, that's the original concept, and most of us, we're not that selfish that we can look outside and not every day is a terrible day, and that there is some peace and serenity in our lives, and that's due to our contribution to the system. What gets us all when we get a little bit to feel like taxes are a burden is when our monies aren't spent appropriately or accounted for properly. But taxes are a practical application of the law of provision. Okay, so taxes support the governments, and we're talking about all types of different government: federal government, state government, county government, territory government, cities, and boroughs are all funded in some way through our contribution. All we're asking is that there be accountable, and there be accountability for it, which is that first principle. But principle of law of provision means that we want to provide so that our environment and our society will provide us certain benefits, safety, lighting, the 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 things that we all desire, the ability to have a home, the ability to make a living, um, the ability to grow our families and have peaceful lives. I mean, in our society, taxes are the bedrock of that. Again, we just don't want them used inefficiently, inappropriately, and we want accountability for them. So, um, but taxes incentivize our behavior in society. It gives the society stability. It gives us, again, things like home ownership, retirement, um, charities, and supplying folks that are in need with different resources. So when we understand these incentives or this support, um, if we can align those things with our personal goals and it benefits society, then it's a win-win situation. Okay, so the law of provision allows us to leverage the tax code that we currently have, and through things like savings vehicles, and when you save money through proper planning, then that money that you save can be strategically allocated to create even more savings from taxes, or to fund investments, or to help you to realize your goals personally, or financially, or even investment wise, a lot sooner. Okay, things like retirement accounts allow us to contribute money on a uh, tax deferred basis. The money can grow tax free, and then in some accounts, when you pull it out, you're taxed. But the idea is that you're taxed at a lower rate because you're not working as much and earning as much income, so you're at a lower tax bracket. Home ownership is a a benefit of our contribution, but the interest that we pay on our home loan can get us deductions, okay, and bring our tax bill down. And then obviously charitable giving works for the government, it works for the society, it works for the individuals that need those resources, and it works for us because I believe all of us want a good society and want to be a productive and contributor to that society. So the law of provision allows us to leverage the tax law and provide for the good of the society, but also to leverage the tax law to provide provision, provide for ourselves and our future, and maybe even our children's future, and even our children's future. Okay. Um, let's see. The law of provision, um, understanding it, get you the ability to align what the government needs or society needs with your financial goals, because when you take advantage of laws that are applicable to you, whether you're in that position already or you position yourself to take advantage of certain laws, then it helps to provide again for the society and the good of society, but also for us as individuals. And we just need to know how to leverage that tax law. Um, so, last question. What's one financial goal that you'd like to align yourself with that you could use taxes or a tax advantage law or vehicle or scenario, like, okay, um, you want to retire early, then you may need to put money into an IRA. You want to retire early, you may max out your 401k if it's a good 401k, and the investments in that 401k are providing you with good returns. Okay, a goal you might want to have is, well, I buy a house, and right now, the home interest that you pay, the interest that you pay, the more is still deductible under certain circumstances. So you're taking advantage of the situation. But yeah, um, what's one financial goal you like to align yourself that allows tax advantages or tax laws to help you with? Okay. Okay. Finally, um, the whole idea tonight's session was about to possibly hope to shift your perspective. Okay. Um, a lot of times it's your mindset that plays the biggest part of the change in the results or the effectiveness of what you do and the final results of what you get. Okay, and tonight's conversation is really about what is going to be your mindset. How are you going to look at taxes? Why do they matter? How does it affect us? We talked about a history of taxation and what it in concept is really supposed to be. The concept is still there. We see it and use it every day in those four principles. And as a matter of fact, let me restate the four principles, because taxes are built on these principles. Again, the principle of contribution and accountability. Okay, we contribute through our taxes, and all we're asking for our public officials and those that have the money that we give them is to be accountable for. But we're also accountable for paying our taxes and our fair share. Um, the next principle number two, is knowledge is empowerment. Okay, the more you know about a subject, the better decisions you can make about that subject. Okay. Principle number three, ownership and strategy. We take ownership of our tax life, and then we strategically plan it out, proactively plan it out. We understand we got up to 40% of our lifetime income riding on our ownership and our strategy. And then the final principle is the law of provision. Okay, what if we want something to grow and to thrive, we it needs to be supported. Okay, and that's anything. So here's one thing: as I was writing these principles down, I realized that, hey, these aren't just principles that apply to taxes. These principles actually can apply to many parts of our own personal life. Contribution and accountability, knowledge is empowerment, ownership, and then strategy, and then the law of provision. These are actually principles that cut across many of our lives, not just our tax life. It can cut across our being parents, or our being students, or our being children, or our being grandparents, or our being employers, or our being employees, or our being government workers, or our being just John Q. Public citizens. But these principles are immutable, and they really don't change, and they can be utilized in many facets or many of our lives. Okay. Key takeaway for this particular session: taxes touch almost every part of our lives and all the decisions we make financially. We should um, ask, is there a tax element in this that we need to consider? Taxes aren't understand taxes aren't really about the complexity, but it's about empowering yourself with enough knowledge, or aligning yourself with um, a person or institute or something that can provide you with knowledge so that you can empower yourself. And then it's about taking control of your tax life, um, saving money, reducing stress. Okay, that's what this particular session has been all about. Why do we pay sales tax on items? So tonight's conversation was actually more about income taxes, but sales tax. Sales tax actually goes back to one of the principles of contribution and accountability. Okay, so um, the powers that be that align and put tax laws into place, um, they have to determine the the required and necessary amounts that it takes to run a society. Okay, and a sales tax is a privilege tax. Okay, um, I'll give you an example. In our state, I live in the state of Georgia. Um, if you're a merchant and you sell certain types of food or products, you have to collect the sales tax. Okay, and what, again, another misconception, and this goes to the second principle, is knowledge is empowerment. Sales tax is actually not imposed on the owners of the business, and some owners don't even understand how that works. But a sales tax actually is a tax that is collected by the owners of the business for the state, for the privilege of the contributor, which is a person that bought that product or bought that piece of that service or that food item, and as a privilege of receiving an innumerable amount of services, as you buy something, as you um, involve yourself in the economy, the government says we're gonna have to tax you on that item so that we can fund X, Y, and Z. Okay, goes back to contribution and accountability. The government says, okay, we need a certain level of tax revenues, and they look at different things to tax. Okay, we talked about in ancient Egypt and the Roman Empire, how they taxed wheat and barley and crops and labor and food. The government, the intelligentsia, the people that are in power, um, in order to, in concept, run the societies that they run, taxation is bringing revenue. That's the contribution. So there are taxation on so many different things, and it's a way of getting contributions, if you will, from the society to run different aspects of the government. And a sales tax is just one of those type of taxes. And we'll get into more depth about a sales tax. But again, a sales tax is actually collected by that retailer and then remitted back to the government. So whatever that percentage of sales tax it is, it's imposed on the purchaser of that food or that good and that service, and then it's collected by the retailer or that wholesaler, whoever collects tax, and then remitted or sent out to up to the government so the government can allocate it and spend it. Okay, but great question. We're gonna have a whole new, well, not a whole series, but a whole lesson on sales taxes. I might even talk about the different types of taxes, do a little history on those things. But great question. I appreciate that. I appreciate that you're being involved in um, the tax life. in these sessions, these live sessions, are going to be something that I'm committed to. I found, again, my calling. I found my purpose. Everybody's got a purpose. Everybody's got a calling, I believe. Took me quite a while to find mine, but my calling in my tax life, it cuts across a whole lot of different things and different gifts and abilities that I have, and this is why I believe, and this is my crusade for a better tax life for you, a better tax life for me, um, through through these four principles, through planning, and understanding and maybe shifting your perspective. So the next time we talk, we'll be having a conversation about the three pillars of taxation. Okay, these are things that kind of hold taxes up. They are paramount in taxes and taxation. It's income, deductions, and credits. Okay, they're part of every tax return that we do, and they're paramount. And you and I, the more we know about a subject, the better decisions we can make about a subject. So I want to appreciate you guys who are seeing this video, excuse me, this session live. I want to appreciate you guys who are watching it, um, um, I guess on tape or at a later date. And we're gonna get better. We're gonna be more interactive as we start to grow. But yeah, again, this is my mission. I appreciate you guys. As always, I want to pose a question to you. What's your dream? All right. Thanks a lot. Take care. Bye-bye.